Welcome to the money management section of this course. I believe that this part of the course is something that many of you were pretty excited about, and for a good reason. Money management is incredibly important when it comes to trading, for that simple reason that it helps you maximize your profits and minimize your losses, and that's what it's all about, right? If I take an example of the most important rule in trading, and that is never go broke, because if you're broke you can't trade, right? It doesn't really matter if you have or gain $1,000 in one day if that $1,000 is gone the next, right? So basically that is what money management is. It helps you, like I've said, helps you maximize your profits and minimize your losses. So I want to make a statement right here. This is a statement we all can agree on, and for the simple reason that it is fact. So when you throw something in the air, what happens? Eventually it comes down, right? Why? Because that's the law of physics, right? We don't dispute it. We don't really know why, right? Or I don't know why. Maybe you're some kind of physicist. But anyways, when we throw something in the air, it eventually comes down, and that's because of law of physics, and that's something that we don't dispute and we don't argue it, right? Same thing when it comes to math. 2 + 2 = 4, because it's the law of math. I don't know what's the proper word for that, but it's the law of math. We don't dispute it. 2 + 2 = 4, and that's just the way it is, right? The reason for me coming out with these statements is pretty simple. Money management is something that works. Money management is math, right? We don't dispute math. There's an old saying, there are 2 things guaranteed in this world, right? Have we all heard that saying? There are 2 things that are guaranteed in this world, and that is death and taxes, right? But actually, if we get if we take that statement and make it accurate, there are a few things that are for certain in this world. Death is one of them, right? That is something that no one can escape. Physics is another thing that it's the law of the universe, right? The third thing is math, right? So these are the 3 things that are guaranteed in life: death, physics, and math. And you're probably wondering why I'm telling you guys all this, and let me get to my point. Like I've said, money management is math. If you are someone who wants to know why the math works out in the way that it does, I have taken together some links to some pages. I will also give you the PDFs for you to read. And in these articles and PDFs, you can read about why money management works and the math behind it, right? In this section of the course, I will not be teaching you math or Excel, or how to put up an Excel spreadsheet, right? There are multiple formulas in the spreadsheet. There are, and of course these are mathematical formulas. If you want to know why and how money management works, read the PDFs and go to these links, and you will see why it does. We have smooth money, we have the smooth ratio money management, which is the money management we use. We have a link to some, I think it's 5 or 6 different money management strategies. And we have a link to the fixed fractional and fixed ratio money management. All different kinds of money management systems. Some better than others, right? I believe the smooth ratio money management is the best one for me personally, and that's why and that's the one I know, and sometimes we can take the difference between smooth and compare smooth money management with the fixed fractional and the fixed ratio. Those are the fixed fractional and the fixed ratio are the two most well-known money management systems, I believe. And we can compare it, but I'm not going to do that. This is the money management system I use. This is the money management system you will get access to, this spreadsheet right here. In this video, like I've said, I'm not going to be going over the math behind it or why it works. The reason I told you in the beginning, when you throw something up, it eventually comes down. It's because it's something we know works, right? Or we know that will happen. Same with the money management sheet. This money management sheet is something that works. There are mathematics behind it, and that's why we trust it, right? This is not something that was put together willy-nilly and produces us with profits, right? So in this section, I'm going to go over the money management sheet and how it works. It's pretty simple. There's not a lot of complications behind the sheet. It's pretty much dummy proofed. So you simply have to write in your numbers and your starting equity and your delta and your initial units, and the sheet will do the rest. But let's go over it anyway, the whole thing. So of course, here is the date. So this spreadsheet is set up with that in mind, that you have the whole trading year in it, right? So the trading year is considered to be 264, 265 days, give or take. So this is set up with that in mind. So you have day one. So if you start on day one, you have the week set up for you. And of course, we don't trade on Saturdays or Sundays, and that's the weekend right here, the gray area. So you should be able to use this spreadsheet within one trading year. If you like to put your results in a different manner, let's for example say that you like to combine all your pips over the week and put that into your spreadsheet, you of course just change the day into weeks and weeks into months, right? But this spreadsheet is set up for you to place your profit and loss on a daily basis, and you will get the weekly profit and loss and the percentage, right? So first thing is the date. Right here is the profit and losses in pips, right? You just write in your profits or your losses. Just simple, just write in 20 if you win 20. If you lose 20, you just write in minus 20, right? Simple as that. So here you will get the multiplier. Here are the units or the lot sizes you will be trading. And this will continue, we'll get to this a little later, but this is the holy grail of this spreadsheet, right? Like I said, let's take a look at that a little later. So here are the profits and losses according to the units traded. Here we have the equities without money management. So for you to compare with money management and without money management. And here's the equity with money management, right? Here's the change in percentage, right? So like I said, here are the weeks combined. So you will have the week for you, 1, 2, 3, 4, 5 days, and this will be combined into week number 1, right? So we gained 20, 40, 60, 80, and lost 20. That is 60 pips in profit. Simple as that. So here is the equity as it stands after the weeks, right? After week 1, we've gained 60 pips, right? So, and our starting equity is $10,000. So we stand with $10,060. After week 2, we gained 100, and we stand with $10,160, right? And here you have the change in percentage over the course of the weeks. So right here is the starting equity. You can write in your starting equity, whatever that may be. And you can see that this is all linked together. You have your ending equity right here. And this is, if I scroll down, this is the last number you write in right here. $10,020. That will be our ending equity, right? So whatever number you write in at the bottom, let's say you've come this far. Let's say you write in 50. Your ending equity will state 50, right? And this is what as you go on with the sheet, this will always take the last number you write in, right? Or the last calculated number. The minimum should always be less than your starting equity for the units to be calculated. The minimum is a part of your something you can't exceed your losses, right? So if you have a $10,000 account, you've done your back testing and you've seen what your drawdowns, your maximum drawdowns are, and you know that you can't go lower than $6,500, right? According to your back testing, that's the lowest you can go without something being wrong, right? So this is something you will have to know through your back testing. So these initial units or lot sizes, what will you be trading? Will you be trading 1 unit, 2 units? These are 1 unit is 10,000 lots. So we can see that on our back testing. Let's see if I have the back testing spreadsheet here. I think I've set the wrong. So we have initial units. That's 10,000 units is one mini lot, right? Did I say that? So here you have 10,000 units represented by 1, right? So you don't go 10,000 right here. And 2 represents 20,000, which represents 2 mini lots, right? So the delta is simply a mathematical variable. The delta states how aggressive you're going to be, or how conservative you're going to be. 5,000, delta of 5,000 is pretty conservative, and you can change this as you please. So the lower the number, the more aggressive your money management system will be. Right? Remember that. The lower the number, the more aggressive your system, your money management system will be. Right? You can also change the slowdown multiple. The trick is, right? Listen to this. The trick is when deciding on how aggressive you want to be, the trick is to find that sweet spot between the delta and the slowdown multiple. So for example, I can do the same thing with the slowdown multiple as I did with the delta. So if I change the slowdown multiple from 3 to 10, look at the ending equity, 19,000 to 73,000, right? So same thing, it's just a change in units on how aggressive you are. So it's important to find that sweet spot between the delta and the slowdown multiple, right? So don't have a really slow multiple and a super aggressive delta, right? Can you see how the graph just, let me just change this minus into a plus so we can get a clear vision of this. So can you see how the curve goes from 10,000 and then a slight curve and then just goes straight up, right? So opposed to if we have a 3,000 delta, right? Can you see this graph? This looks pretty much like no money management. So the slowdown multiple will give you a, not 3,000, that'll be ludicrous. You can see we got just a lot of errors. So the slowdown multiple of 3, you can see you get this nice curve right here. You don't get a straight a curve and a straight line to the upside. The slowdown multiple controls that sweet curve and the control of the units, right? So you don't jump from unit 2 to 3 to 4, 5, 6, 7, 8, or 9 and go to unit I don't know, 21, right? If you're trading 21 units, you are risking a lot of money, so you better have a huge account for that, right? That's the difference between the smooth money management and the fixed fractional and fixed ratio money management, right? There's no slowdown multiple that allows you to smooth things out into a nice even curve like the smooth money management does, right? In those other money management systems, you get a beginning curve like this when your lots are, I don't know, 2, 3, 4, 5, 6, right? But then you increase when you keep on winning. You will have to increase the numbers of units, and in the end, if you have a large account, the units will just become unsensibly large, right? So that's what the delta and the slowdown multiple does for you in this smooth money management system. Ergo, the name smooth gives you this smooth curve. So it's important for you to find out for yourself, if you done your back testing and you've plugged in the numbers, just play around with these numbers, find the perfect delta and smooth ratio for you, right? So if we have 5,000 with a 5 delta, same thing, it's a smooth curve on the graph, and of course watch your equities as well, so you can find that sweet spot, right? Does this look appealing to you? If you have a 3,000 delta and a 5 slowdown multiple, you can see it's pretty steep, opposed to a slowdown multiple of 3,000, a delta of 3,000 and a slowdown multiple of 3, get a more even curve, right? All right. So I want to show you how the mathematics behind this work, or on the sheet, right? So as we can see, we have the starting or the initial units of 1 or 10,000, right? So the money management, like I've said before, this is the holy grail, right? And I will show you why now. You will do exactly as the money management spreadsheet is telling you to do, right? So if you see 1, you will not trade 2, right? You will trade 1, right? It's not until the spreadsheet tells you to increase in lot size that you increase, right? You will never do anything without the money management sheet telling you to do, right? So when you see that you have a 2, you increase, right? When you see you have 3, you increase, right? So, and as you can see, you will be trading the 1 mini lot for quite some time. You don't increase until, what is this, day 146, right? So for some people, for some conservative people, that's the way to go, right? But for others who are more impatient, who are more aggressive, that's not the way to go, right? So of course, the more aggressive you are, the more potential profit you can get, right? But of course, the more aggressive you are, the more potential loss you can also get. So there's a fine line there, and you must be prepared. If you are an aggressive person, be an aggressive trader, right? If you are a conservative person, don't be an aggressive trader. Why? Because your mind will never handle the aggression level, right? You have to find your golden mean in trading, and match that to your personality. It's really important. So let's take a look at how powerful the money management sheet is, right? So we have our initial starting equity of $10,000. We have the ending equity of $15,780. And this is by, the reason I put in 20 pips a day is because we all heard that in the beginning, right? Just win 20 pips a day in the Forex market and you will eventually be rich. Have you ever heard that? I remember when I was starting out, I did these calculations on my own. I admit that. So I calculated if I win 20 pips a day, I trade 5 days a week, and then you just calculate 5 times 4, because 4 weeks, that's 20. 20 times 20, that's 400. That's 400 pips a month, right? And you can trade 1 lot, and you will get $400 extra in your bank account each month, right? Simple math. That's the reason I'm using the 20s, and of course this is just bogus default numbers. You will put in your exact numbers right here, but we can use this just to see how powerful the money management system is. So with a super conservative, or not super, just a really conservative delta of 5,000, we start out with $10,000 and we end the year in 15,900, right? Fine, that's a nice return on our investment. But let's take a look at this one, and we change it's 59% gain, right? And that's fantastic. 60% in 1 year. It's fantastic returns, right? But if we want to change the delta, so remember when I said the lower we go, the more aggressive we are, right? So if we change the delta to 2,000, see what happens to the numbers. Boom, we gain $29,740 over the same period. Nothing has changed. We're still gaining 20 pips a day, right? The only thing that's changed is, remember, we went 146 days without increasing in units. Now we increase in units on day 51, right? That's the only thing that's different. And that's money management. The money management is nothing more than increase and decrease in units or lot sizes. That's it. And of course we have some calculations behind it, but in essence, that's what money management is. The money management spreadsheet will tell you when you should increase or decrease your lot sizes, right? So if we want to get super aggressive, let's change this to 1,000 and look at the numbers. $68,480, right? We have 585% return on our starting equity. On our $10,000 starting equity, will become, or became, if we keep winning 20 pips a day, $68,480, right? Versus, let's take a look at the no money management. Starting capital, $10,000. End of the year, $13,740, right? Versus the 68,000. And of course, this is for example's sake, and this is not realistic numbers, guys. Don't take your socks off, right? But this is nevertheless the power of the spreadsheet and the power of money management, right? So just by changing one number, all right, let's do something crazy right now. I'm gonna change another number. So we are super duper aggressive traders with a delta of 1,000. What happens if we change the initial units? We double the risk. Let's change it to 2. Let's see what that does for us. All same numbers. We have the same starting equity. We gain the 20 pips a day, right? Easiest thing in the world. Boom. 81,440. 740% change in equity, right? That is massive results. Can we go any further? Let's change it to 500. Boom, 178,340 bucks. Right, 1,683% change on our initial 10,000 starting equity. How crazy is this? Right, and the numbers are still the same. We have the same 10,000 bucks to start out with, and the same 20 pips a day. Right, this is of course assuming we never lose, and we always gain 20 pips a day. So let's go into week number, what is this? 1, 2, 3, 4, 5, 6, 7, 8. Let's go into week 8 and let's pretend that something happens in week 8. We lose, let's say we lose 150 pips. A massive loss, right? To our 20 pip gain every day. What happens? Well, we go from, what's this, 17,260 to $14,000 in one trade. And you must ask yourself, do I handle losing $3,000 or almost $4,000 in one trade, right? And then that's when the delta comes into play and yanks you back down to earth, right? Because it's all sunshine and rainbows when the numbers are all plus. But when I hit that minus, right? This is $4,500 to be exact, right? That's a lot of money to lose on a single trade, right? So let's get back to the conservative side of things. Let's go back to a 5,000 delta, right? We come back down to earth. Starting equity is 10,000, or ending equity is $21,860. Fantastic results over the trading year. And let's take a look at our loser. We lost the 150 right here, and we lost 300 bucks, right? In retrospect, is that something you could more handle than the 4,500 bucks you lose, right? So it's just a matter of playing with the numbers. So nothing, like I've said, nothing's changed. Same starting, we have the same pips. But of course, if you get realistic, this is not going to happen. Please do not expect you to win 20 pips a day, and that's gonna be your life. Just 20 pips a day, and the only thing you need to do is change the delta, and you're gonna be a millionaire overnight, right? So of course you will have your profits and you will have your losses. I have never heard of anyone maintaining this 20 pip bullshit calculation strategy. So like everything that's not everything, like some things on the internet from the scammers out there, this is not realistic, right? This is a demo, and this is for your training purposes only, right? This is for you to see how the money management works, and guys, you will just place in your backtesting results, right? When you're done. That's just as simple as that. Do you want to know how much your system or your strategy provides with the money management system? just plug it into the sheet and play around with the numbers, right? Find what you are comfortable with. If you are a super aggressive person, trade the 2000 delta, fine. But you're going to be, you have to handle, if you lose 150, you're going to handle losing 600 bucks. If that's something that you can handle, great. Trade the 2000 delta. You can trade this 3000, 3500. You can do literally whatever. Change the initial units, right? We can also do this. Let's do something really, really unrealistic. Just for all the guys, I'm going to make a video on and I'm gonna name it "How to Gain Millions" something, because there's a lot of people out there that just make money off their whole life, or their whole gain of money in life is just ripping other people off. And that's I mean, so immoral. I can't even talk about it. But nevertheless, I'm gonna show you how it's done, right? So starting equity, 10,000 bucks. Delta 500, super aggressive. Initial units 6. Right? From 10,000 bucks, I have gained $207,520 in the same time period. Right? Initial units 12. $238,000. Can you see how people can be manipulated into believing such a thing just by writing it on a spreadsheet, right? Because they refuse to see that if they lose 150 in pips, they're going to lose $8,000. But wait, what if they lose, let's say 150, let's say 100, let's say 200, let's say 150. It's not uncommon to lose 6 trades in a row, right? So 1, 2, 3, 4, 5. Let's make it 6 trades in a row, right? And that's just that's not uncommon in the forex market. You are going to be losing 6 trades in a row, right? So let's take a look at the graph. So you went from $10,000 to $33,000, and then you hit your 6. By the way, these are only 6 trades. Then you hit your 6th trade losing streak, and you went to 8,000. So ask yourself, is this something you can handle, right? So you went from 200 or something thousand to 55, and that's assuming that these 6 losers are only the trades you lose, right? So please, guys, be realistic when it comes to expecting something in the forex market. And I'm not trying to be negative, right? Of course, this is made for you to maximize your profits, right? But you will have to be able to have to be able to accept and realize that losses is something that's part of trading, and you will have to accept those losses, and you will have to make up your own mind for how you're going to deal with the losses, right? So if your heart keeps beating or pounding when you lose, right, you've got that anger, then you might want to ask yourself, maybe I'm risking too much, right? Maybe I need to take my delta to a higher level, be more conservative, right? Maybe I need to just take my units down a little bit so I don't get so excited when I'm trading, right? You won't win as much, right, in dollars, but you won't be getting a heart attack either from trading, right? So that's important. These are important things you need to ask yourself and actually have a conversation with yourself on how you are going to trade and how you're going to deal with the things that the Forex market offers. Because guys, this business is not always sunshine and rainbows, believe me, right? And that's the last thing I want you to get out of this course, is that you're going to be millionaires overnight, right? I've told you multiple times that's not gonna happen, right? You have to put in ridiculous amount of effort and time, and for the first, I don't know your situation, but for the first months or years or whatever, you're not gonna get much of a return, right? And that's in retrospect to the effort you've put into this course and put into your life. So this is something you will have to be prepared for also, right? But as you can see, with a conservative money management system and everything's pretty solid, these numbers are pretty nice, 10,000 to 15,900 with the money management. Without it, only to 13,000. So that's the power of money management. Yes, I want to show you also one thing more. Let's take it down a notch, because for me to be able to show you guys. So remember, I told you the money management helps you maximize your profits and also minimize your loss, right? So that's what I'm talking about by minimizing your loss. Let's say you're here and you've started your losing streak, right? So you're trading 3 contracts as of this moment and you start losing. So you lose 60 pips, right? You lose 60 pips again, and see what the spreadsheet does. It tells you to decrease from 3 to 2, right? So that's what this is the importance of the Holy Grail, this section right here. Never ever betray what the money management system is telling you to do. If the system tells you to decrease in lot size, you decrease. If your money management system tells you to increase in lot size, you increase. This is pretty simple, but can be so hard for some people, right? Especially people that just love to be right and love to gamble, right? So the most common thing when you've hit your losing streak is, but if I decrease in lot size, I won't be able to make up for my losses, right? You will in the long run, because let's see what happens when you start your winning streak again. 2020, 2020 on after, what is this, 10 days approximately, you will go higher again in lot size, right? But the most common thing is, I won't be able to make up for my losses. That disproves that, but I'm just telling you, believe in, not believe, this isn't belief or faith, this is math. So put your beliefs on side for just a moment and let math do what math does, right? So increase and decrease as the spreadsheet tells you to. Like I said, if you want to know how all those money management systems work and you want to know the math behind it, I'm going to make that available for you by some documentation. And I don't know, please read them if you want to. So that's it for this video and this money management section. I'll see you in the next one.